What if I told you the real collapse of Germany's financial system didn't happen at the peak of hyperinflation, but long before the famous images of citizens pushing wheelbarrows full of money? What if the true breaking point came quietly, inside the walls of the Reichsbank in early 1923, when the institution meant to protect the nation's currency realized it couldn't protect itself? You may think the hyperinflation story is simple. Prices soared, money lost value, chaos followed. But here's the truth. Before a single loaf of bread cost billions of marks, the foundations of the Reichsbank were already cracking. And those silent fractures set off a chain reaction that reshaped modern monetary policy. Picture Berlin in early 1923. Cold, tense, exhausted. The country was still paying for a war it had already lost. Reparations under the Treaty of Versailles drained public finances like a leaking bucket. Every week, the government needed more cash. And the easiest solution? Print. Then print more. And when that wasn't enough, print even faster. But wait, that's not the whole story. Contrary to popular belief, the German government didn't operate the printing presses alone. The Reichsbank, technically independent since 1920, was supposed to act as a brake, not a gas pedal. It should have said no, or at least not this much, not this fast. Instead, something extraordinary happened. As foreign creditors demanded payment in hard currency, gold or dollars, the Reichsbank became desperate to defend the mark's reputation on the world stage. So it intervened in the currency market, spending its dwindling reserves to stabilize exchange rates. Imagine trying to stop a flood with a handful of sandbags. You know it won't hold, but you keep stacking anyway. Each intervention weakened the bank further. Each day of hesitation made the mark more vulnerable. And each political demand, just a little more credit for the government, pushed the system closer to the edge. By January 1923, the situation reached a new level of crisis. French and Belgian troops marched into the Ruhr, Germany's industrial heartland, to enforce reparations. Workers went on strike in protest. Coal output collapsed. Tax revenues evaporated. The government promised to pay idled workers to keep morale alive, but there was no money left. So officials turned once again to the Reichsbank, and this is the moment the institution truly broke. Faced with a government begging for emergency credit, foreign investors fleeing the mark, and a domestic economy grinding to a halt, Reichsbank President Rudolf Havenstein made a fateful decision. He would issue credit without restraint. Not because he believed it would help, but because the alternative was political suicide. Germany needed the loans to survive the occupation crisis. The government needed the loans to pay striking workers, and the public needed the loans to buy food and coal in a collapsing economy. So the Reichsbank became the government's emergency lender and its ultimate hostage. Think of this like a household already drowning in debt. Instead of cutting expenses, it takes out payday loans with interest rates it can't afford, hoping next month will be better. Except next month wasn't better, and neither was the month after. As the mark collapsed on international exchanges, the Reichsbank's gold reserves vanished. Its credibility disappeared even faster. But here's the twist that most history books gloss over. The internal collapse of the Reichsbank happened before the public realized anything was wrong. On paper, the bank still functioned. The printing presses were running. Loans were flowing. But internally, the institution had already forfeited the one thing a central bank needs to survive: trust. Without trust, money isn't money. It's paper. Act by act, decision by decision, the Reichsbank crossed invisible lines. First, it abandoned independent monetary policy. Then, it lost control over the quantity of currency. Finally, it stopped pretending it had any plan at all. And while Germany's streets in early 1923 looked relatively normal compared to the chaos later that year, insiders already knew the mark was doomed. The numbers told a story the public hadn't yet seen: reserves shrinking, credit exploding, foreign exchange interventions failing. Leave a comment. What was the most important lesson for you so far? But the biggest shock is still coming. Because just when the Reichsbank thought it couldn't get worse, a new crisis emerged, one that pushed the institution from instability to full-scale collapse, and turned a quiet financial breakdown into one of history's most infamous economic disasters. Continue? The crisis that finally shattered what remained of the Reichsbank's stability wasn't just economic, it was psychological. Confidence, the invisible fuel of any monetary system, evaporated almost overnight. Through early 1923, German citizens still clung to the belief that the Reichsbank would eventually regain control, that the mark's fall was temporary, and that some political miracle would restore order. But by late spring, a sudden shift occurred. The public stopped believing, and once doubt takes hold, it doesn't whisper, it roars. Imagine waking up and discovering the money in your wallet is worth half of what it bought yesterday. Not because of a stock crash, not because of a natural disaster, but because the central bank can no longer promise what its currency is worth. That's what German families began to face. Shopkeepers changed prices several times a day. Factories couldn't plan payrolls. Farmers refused to sell grain unless they were paid instantly. And the Reichsbank? It watched this unfolding chaos with no tools left. Its gold reserves were gone. Its foreign currency holdings were scraps. Its credibility, once its strongest asset, was now a national punchline. But wait, this is where the hidden layer emerges. Historians often claim Germany's hyperinflation spiraled because the government kept printing money to pay striking workers in the Ruhr. Yes, that's true. But underneath that explanation lies a deeper breakdown. The Reichsbank had already lost the ability to say, stop. Its leaders were trapped between political pressure and economic reality. And political pressure won. To understand why, consider how the bank's lending worked. Government deficits ballooned because reparations were fixed in foreign currency. As the mark fell, Germany needed more marks to pay the same debt. So printing escalated. Then inflation rose, which made the next round of payments even more expensive, which required printing even more. A vicious loop. But here's the darker twist. By late spring of 1923, the Reichsbank wasn't printing money to meet real economic demands. It was printing to keep up with the collapsing value of the money it had already printed. Issuance chased after its own shadow. It's like pouring water into a bucket full of holes. The faster you pour, the faster it drains. But the moment you stop pouring, the bucket is empty. That's exactly how the bank felt. If it slowed down, the whole system would seize up. If it sped up, it would trigger the collapse it feared. And so, day after day, the presses ran. Meanwhile, Germany's trading partners watched with growing alarm. By the summer of 1923, foreign banks and investors had abandoned the mark entirely. No one wanted it. No one trusted it. The currency had become radioactive. This is where the internal crisis meets the external one. Because while the Reichsbank was struggling to maintain the mark at home, it was also losing battles abroad on foreign exchange markets. Every intervention failed. Every attempt to stabilize rates backfired. Each new loan, each newly printed stack of notes, weakened the mark further. You may think hyperinflation exploded later in the year because suddenly everything got worse. But the reality? The detonation had already happened inside the Reichsbank months earlier, when it ran out of credible defenses and pretended it still had some. And here comes the cliffhanger moment. By mid-1923, the German government faced a terrifying question, one it didn't dare say out loud. If the Reichsbank had already collapsed internally, what on earth was holding the country together? Factories were idle. Railways faced breakdowns. The Ruhr occupation had frozen the industrial backbone of the nation. Yet somehow, life continued. But for how long? And then, as if the economic spiral wasn't enough, political pressures intensified. Extremist groups on the right and left saw opportunity in chaos. They blamed bankers, politicians, foreigners, anyone who could be painted as the enemy. The currency crisis morphed into a national crisis of identity and direction. This growing instability pushed the Reichsbank to its breaking point, because what came next wasn't just more inflation. It wasn't just more printing. It was the moment when the institution lost all remaining boundaries, when the last restraints vanished, and the hyperinflation storm finally broke in full force. By late summer, the mark wasn't weakening. It was imploding. Prices didn't rise. They detonated. And the Reichsbank, once one of Europe's respected central banks, had become a factory for worthless paper. But why did the final blow happen so fast? And why did the worst inflation come after the institution had already crumbled internally months earlier? To understand that, we need to uncover the hidden catalysts that transformed a slow-burning crisis into the most infamous monetary collapse of the 20th century. The final trigger behind the mark's freefall wasn't a single event. It was a convergence, a perfect storm of forces that had been building for months. And when they collided in late summer 1923, the Reichsbank's internal collapse finally became visible to the entire world. First came the industrial paralysis from the Ruhr occupation. By August, production had dropped so sharply that tax revenues nearly vanished. The government wasn't just short on cash, it was functionally insolvent. That meant one thing: more emergency credit, more pressure on the Reichsbank, more notes flooding the economy. But here's the twist. By this point, the money supply wasn't rising because of deliberate policy. It was rising because people no longer wanted to hold money at all. Every paycheck was spent instantly. Every business demanded prepayment. Every hour that someone held onto marks meant a real loss of purchasing power. In economics, this is called velocity, how quickly money changes hands. And in 1923, German velocity wasn't just high, it was spiraling. Money was flying through the economy like a hot coal no one wanted to carry. This is where the hyperinflation dynamic flips from government-driven to public-driven. You may think printing alone caused the explosion, but the truth is more unsettling. Once trust in the currency collapsed, people themselves accelerated the destruction. The Reichsbank could print billions of marks, but the public burned through them even faster, creating a feedback loop the bank had no chance of controlling. Let's break it down. 1. Prices rose because people feared future prices. 2. That fear made people spend faster. 3. Faster spending increased demand for currency. 4. Increased demand forced the Reichsbank to print even more. 5. More printing verified the fear that prices would rise, and around it went. But wait, that's not the entire story. A second catalyst emerged: foreign currency substitution. As the mark sank, Germans turned to dollars, pounds, even Dutch guilders. These weren't official currencies inside Germany, but they were reliable, stable, trusted. And in a crisis of trust, that's all that matters. Foreign currencies started circulating in black markets, then in open markets, and finally, quietly, in daily transactions. The more people used them, the less they used the mark. The less they used the mark, the faster it fell. It was a death spiral, not caused by policy alone, but by psychology, survival instincts, and the basic human desire to protect what little one has left. Meanwhile, the Reichsbank was drowning. Its balance sheets grew grotesquely large. Its notes in circulation expanded at rates too fast even to track. Officials tried to issue new denominations: 50,000 marks, 100,000 marks, 1 million marks, 5 million marks. But each issue became obsolete within days. Imagine printing a brand new million-mark bill on Monday and discovering by Thursday that it won't buy you a cup of coffee. That was Germany, late summer 1923. And here comes the historical irony. The hyperinflation's peak wasn't the Reichsbank's collapse. It was the symptom of its earlier collapse. The institution had lost control months before. What the world witnessed in October and November was simply the public arrival of a failure that had been unfolding behind closed doors. But the most astonishing transformation was political. Leaders who once defended the existing system now admitted the crisis was untenable. Industrialists refused to take out loans in marks. Banks froze. The middle class, the backbone of German society, watched their life savings evaporate. Teachers, civil servants, war veterans, all paid in marks, felt humiliated and betrayed. You might think monetary collapses are purely financial, but in 1923, the collapse became national trauma, a wound that shaped politics for decades. And so Germany approached a breaking point. Something had to give. Either the mark would disappear or the government would. Reform was no longer optional. It was an act of survival. The question was, who would take control? Who had enough credibility left to restore order in a system built on distrust? By early autumn, a radical plan emerged, one that would end the hyperinflation, but also reveal just how deeply the Reichsbank had already fallen. It involved a new currency, a new institution, and a complete overhaul of Germany's financial architecture. But there was one final twist, one last unexpected player who would force the Reichsbank to confront the consequences of its earlier decisions and change the course of German monetary history forever. Leave a comment. What part of this turning point surprised you most? Everything now hinged on a single question. When a central bank loses all credibility, can a nation still save its currency? Or must it start over from scratch? I'm ready for the next section. Just say, continue when you want part 4. The answer arrived in the fall of 1923, when Germany finally accepted a harsh reality. The mark couldn't be rescued, not by reforms, not by new laws, not even by slowing the presses. The currency had become a symbol of national failure, and the only solution left was to replace it. But who would lead that transformation? Certainly not the Reichsbank. By this point, its authority had evaporated. Its president, Rudolf Havenstein, still insisted he was doing everything possible, but even he couldn't deny the truth. The institution he led no longer shaped events. It reacted to them. Then came the final shock. In November 1923, Havenstein died unexpectedly. His passing wasn't the cause of the hyperinflation's end, but it did remove the last vestige of continuity. With him gone, Germany had no choice but to reset its monetary structure from the ground up. And so the stage was set for one of the most dramatic financial resets in modern history. Enter the Rentenmark, a new currency backed not by gold, Germany had none left, but by land and industrial assets. It was an economic gamble, a desperate bet that Germans still trusted their nation's real, physical wealth, even if they no longer trusted its paper money. The Rentenmark wasn't introduced by the Reichsbank. It came from a brand new institution, the Rentenbank. Fresh leadership, fresh rules, fresh credibility. And these factors mattered even more than the technical design of the currency. When the Rentenmark launched, something remarkable happened. The public accepted it almost immediately. Why? Because it represented a break from the past, a message that the chaos was over and a new chapter had begun. But the transition also exposed how deeply the Reichsbank had collapsed months earlier. The new currency's success didn't come from clever engineering. It came from removing an institution that had lost the nation's trust. To drive this home, consider what happened next. Prices stabilized within days. The runaway velocity of money slowed. Foreign exchange rates stopped spiraling. People stopped rushing to spend wages the moment they received them. In other words, the crisis didn't end because Germany solved inflation directly. It ended because Germany solved the confidence problem. The nation finally had a monetary authority capable of enforcing discipline. Here's the profound irony. The peak of hyperinflation in November 1923, the moment when a loaf of bread cost billions of marks, wasn't the climax of the Reichsbank's failure. It was the final echo. The real collapse had already occurred in early 1923, when the bank gave up its independence, surrendered to political pressure, and lost credibility in the eyes of both Germans and the world. Everything that followed, the bill denominations rising from millions to billions, the wheelbarrows of cash, the images we remember today, was the public aftermath of a private institutional breakdown. And the lesson is as relevant now as ever. A central bank doesn't collapse when its vaults are empty or when its policies fail. It collapses when people stop believing that it can deliver stability tomorrow. Trust is the currency behind the currency. When trust breaks, everything breaks. That's the story behind the Reichsbank collapse of 1923 before the hyperinflation peak. Not a sudden catastrophe, but a slow, silent erosion of credibility that reached its breaking point long before the numbers went wild. As we close, think about how fragile modern financial systems can be. Think about the institutions we rely on to anchor the value of money itself. Their power doesn't come from printing presses or reserves. It comes from the belief that they can keep their promises. If that belief fades, even the strongest bank can fall. And if that belief holds, even a bankrupt nation can rebuild. Subscribe to receive more reviews like this, stories that reveal the hidden mechanics behind the events that shaped our world.